An established uptrend begins to settle into a horizontal range for quite some time. More recently, with retracements returning back higher, the chart's going from neutral to more bullish, providing appropriate conditions to place a Fibonacci channel on the chart to give a better idea of how price can behave within the broader incline. Some finer details are missed with the default channel settings, so it can be useful to add those less common 414 and 272 levels. Then, with a more significant reversal underway, it can be useful to reorient the Fibonacci retracement, but leave the channel the way it is. Or just leave the original retracement the way it is with its extension levels once it becomes apparent a decisive bullish continuation has taken place. In terms of the element of time, the recent continuation with clear swing points provides excellent conditions for the application of a trend-based Fibonacci time zone. In order to narrow down the most relevant area of interest, in the context of these most recent developments with price reaching the 200 threshold, with the increasing likelihood of a double top completion, the rest of this area will likely not be relevant unless price can quickly rebound and re-enter the range. Since this does not happen and the double top reversal progresses lower, the time range is still relevant except with a different price range. Falling price at this approximate time onto the levels around the 160 range mark an area of interest that can present significant opposition to the downtrend. However, this doesn't necessarily mean a bullish reversal will take place. Rather, it defines an area where the trend pauses prior to a bearish continuation. Since the trend-based Fibonacci time zone is based on such clear context, some clear developments still take place near its upcoming lines. This is normal, but it is suggested to reference more recent developments when applying variations of Fibonacci time zones, especially after major changes have taken place on the chart.